Good morning, everyone. It's Ben Buckner and Dan Bossy with you. It's Wednesday, September 17th. Welcome to Federal Reserve Day, everyone. I think that's on the top of everyone's mind. Probably dominates trading. We were expecting a quarter or a half a percentage point in benchmark lending rates that broadly has supported raw materials, I think even crude, which so far this week is up $1.50 a barrel. The US dollar yesterday, new 3.5-year low settlement. So I think that's given us some kind of pillar of support. We're also awaiting clarity, of course, on the two most important things: U.S. yield, total supplies, and U.S.-China trade policy moving forward. And so we've got the probable call between Presidents Trump and Xi on Friday that we think will mostly center on the TikTok deal, the transition from Chinese ownership to the U.S. Maybe nothing else, but Dan, break down what is on top of your mind this morning.
Yeah, Ben, well, thank you. First thing, let's go towards the EPA and talk a little bit about their announcement yesterday. EPA is now seeking public comment on SRE reallocations between 0 and 100%. Now, the courts are likely to decide if EPA has this authority, if you will, to reallocate. It's not clear in the Clean Air Act of 2007 whether or not that's the case. And again, the U.S. Congress is also weighing in on this, but there's a public comment period now that'll last through October 31st. I would imagine 2 to 6 weeks after that, we'll start to see whether or not the EPA makes a decision. And thereafter, there will be court challenges and legislative challenges and lots of other things. So there's a lot of uncertainty. But let me say this, that although this would impact U.S. soybean oil demand, we only have so much crush capacity. So if you think about the soybean, we can only run soybeans through so many processors, that being about 2.54 billion bushels. You can't go up further than that. So if we need more oil, it's going to have to come from other sources, other products, if you will, because we don't have soy crush availability. So when you look at this, it's really not all that bullish of soybeans. It helps the soybean oil, may help crush margins. But what we really need to see is more plants or come online. We do get a plant in Nebraska coming online here right now. That's helpful. But thereafter, there's very few plants looking down the road. So we're through the vast majority of the U.S. crush build out. Maybe there's new investment, but I would argue that because of the abundance of soybean meal that's going to be coming, I don't think new crush facilities are really warranted. As you then think about, other things that will affect the market, one of the things the bulls have been talking about has been, of course, this Chinese discussion with President Trump, Trump probable talk. I think you said it right, Ben, on Friday. We don't have confirmation yet of the timing or when this will occur. I believe TikTok was easy. That was the only thing that really got achieved in the, of course, negotiations in Madrid. I am told that grains and some of the other goods trades was brought up and promptly struck down. So when you think about what is this going forward, I am not seeing any evidence that Xi or Trump will break through in terms of getting a tariff deal on Friday. Again, this would mean that the U.S. would drop fentanyl tariffs of 20%. I don't think Trump wants to lose the revenue. Chinese would then drop their 23% tariffs on U.S. soybeans and other grains. I don't think that's going to happen. So again, TikTok is easy. They'll talk about the broad generalities of it, but I don't think we'll go farther than that. Pro farmers out talking today that maybe in late October, early November, the Chinese would like to have Trump, of course, attend their country. And maybe that it could include a deal for Boeing aircraft or U.S. soybeans. That's always possible. But I think there's a lot of negotiations yet to cross. Today, I'm disappointed in what happened in Madrid. And when you don't talk about something, it means it's hard and it's not going to be coming forward at least anytime soon. Remember that a year ago, the U.S. exported 13 million metric tons of soybeans, September, October, November, first month of the crop year. That's almost 500 million bushels. So I'm getting more and more confident as time goes by here, because it takes 4 to 6 weeks to buy, get documentation and then load and logistics worked out for a shipment to go forward, that we're getting to the end of November where it's going to be very difficult to get that 13 million metric tons or 500 million bushels of soybean demand coming back. There's also been a lot of talk about, USDA's export estimate of September soybean yields will drop. It may well drop. Ag Resources on record saying because of lower pod weights already, we don't think it drops more than a bushel of acre. But I wanted to go back and give you this shotgun scatter diagram. I use shotgun in terms of looking at all the dots and what's the correlation between September and final estimates. You can see here there is none. So a lot of times Ben and I try to work hard to see that these relationships are either workable or not workable. Just because soybean yields went down from August to September doesn't mean that we're now riding a bull wave train on lower yields all the way into January. In fact, some of the early yield data, and again, way too early for a trend, is showing better than expected soybean yields, principally across the Western Corn Belt. In the same stead, I've been hearing a lot of talk about U.S. corn yields. Oh my God, we're seeing non-fungicide fields yielding 20 to 40 bushels less than last year. I'm not saying that information is untrue. It's probably likely, but I also would challenge all of you that are watching this video, if you do any analysis, to go back and look at the peripheral states, because when you start including corn yields from areas that didn't have the weather problems in August, Kansas, Nebraska, North Dakota, South Dakota, Minnesota, Wisconsin, maybe even into states like even Pennsylvania and then through the Delta, you end up with the I states. Yeah, you can maybe get down to 182 or 183 bushels an acre by cutting Illinois, Indiana, Ohio by 10 or 15 bushels each. But it really takes the peripheral states if you want to get below much 182 or 183. So do the math, work hard on it. Ben and I are still more impressed by the extra acres of corn and how big the pile will be. But I do understand that people want to talk about lower yields. When that news is digested, we'll see a top in the corn market and we'll start to see the retreat going forward. It's all about timing. Also, when you look at South America, Brazil is actively exporting corn, 1.8 million metric tons last week. Here's our projection for ship lineups in September. We think that'll carry forward into October. So this big Brazilian corn crop will find itself to the marketplace. I'm going to estimate 45 or 46 million metric tons versus USDA's 43. But you can see in this graphic here that the ship lineup and the world demand is shifting, both to Argentina and Brazil for corn. So as we think about future U.S. corn sales, I'm disappointed we're not getting more daily announcements. And we haven't seen, of course, weekly exports last week were disappointing. I'm fearful that that's a trend that could persist. Looking at South American weather, this is a 2-week forecast. So I've gone all the way out now to October 2nd, just to give people visibility of what rainfall will look like. And you can see both in Argentina, stretching into Paraná, Mato Grosso do Sul, and even Goiás, we're going to see some pretty good planting rains. So this is going to be helpful for getting soybean planting underway in a very timely fashion. This hasn't happened for the last couple of years. These soybeans will be available to the market in late December throughout the first half of January. So if you get them in earlier, they come out earlier. Remember, Brazil plants a 100 to 105 day bean, much shorter than the United States, so they can follow with corn. The setup for both crops would be favorable if we can get the beans in the ground early, at least at this stage. Lastly, it is a bank determination day. The U.S. Central Bank is expected to drop rates 0.25% to 0.5%. I've had questions saying, well, when we drop rates, is that bullish of commodities? I would remind everybody that for 16 years, we had U.S. interest rates at zero. That does not assure a bull market in commodities. We do see the gold market and silver market rising, but just lower rates by itself because of a slowing U.S. economy is not something that generates a buying mentality in commodities unless inflation is rampant, as it was at the pandemic of 2020. Today, inflation rates 2.93%. That's not enough to get the big hedge funds to look at the commodity pool as being investable in terms of an inflationary story. Ben, I've taken enough time of everybody. Back to you, and we'll just kind of summarize here and go home from there.
Yeah, I think so. I mean, we are mantra again, navigating markets, managing risk. And I think, this week, today, and tomorrow, we can't disprove or prove any yield estimate in the U.S. with precision. How Chinese trade negotiations are going. So we've got another 24, 48 hours of this for sure. We'll see what that talk does take place on Friday. But being prepared, I think, you've proven, Dan, through the data that, the conventional wisdom is small crops get smaller, big crops get bigger. That's not necessarily true. So let's be ready for that. And also just throwing out December 26 corn at $4.70 and January 27 soybeans at $11. Let's look at those, think very hard about those as we kind of navigate, fast forward to South America, avoid weather threats, things like that. So be prepared for another choppy day. We're all waiting on Friday and combine data, and that's about it for the next week or so. So we'll be back tomorrow with more information, and have a great day in markets.